Hello, and welcome to the 11th episode of the US Market Open with FX Pesa. My name is Rufas Kamau, markets analyst at FX Pesa. So feel welcome. Before I make any progress, I'd like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live chat, and these will confirm that everything is working just fine. So as we all know, today is Tuesday, and on Tuesday we focus on the US Market Open. We mainly go through the major US indices. We look at the major currency pairs, look at commodities, gold and oil, and also Bitcoin. Once we are through with these, then we're able to identify the key price levels, the key fundamentals that are influencing the markets. And once we understand these, then it becomes easy to identify opportunities in the markets. So let me know if you can hear me clearly so that we can proceed right away. Awesome. Hello, Tino. Hello, Richard. Hello, Fiona. Hello, Tintin. Thank you, guys. Thank you for your responses. Hello, Eugene. It's great to meet you guys. Hope you're all doing fine. So let's get to it. So the chart you're looking at right now is the chart of the dollar index. If you try and zoom this out, you'll notice that the dollar index has been on an almost upward momentum, almost vertical momentum, basically indicating that the dollar index has been extremely strong. So the dollar is basically, the dollar index is basically a measure of the strength of the dollar against a basket of 6 other currencies. We mainly focus on the dollar against the euro. Euro has the most weight in the index. We also have the pound, we have the Swiss franc, we have the Swedish krona, we have the Japanese yen, and also the Canadian dollar. So clearly, you can see that the dollar is trading at 113.732. So this is a real high that we have not seen in a long time. So in over 20 years, we have not seen the dollar trading this strong. So by reading 113.74, basically means that the dollar is about 13.74% stronger than these other currencies. So clearly, with the dollar strength, then we expect some major trends to be happening in the individual currency pairs. So for instance, if you go to pound USD, then you notice that the pair has been extremely bearish. So just going through quickly, this is the pound USD currency pair. So you can see it's almost a vertical drop towards the lower side, indicating a much weaker pound when compared against the US dollar. So it has been quite consistent since this particular high around May last year. So since then, for over 1 year, we have seen the pound continuously lose to the dollar. So one of the major turning points has been somewhere around here, and this is around March of this year. So around March of this year, this is when the Federal Reserve Bank of the US started raising interest rates, moving from 0.1% all the way to the current rate at 3.25%. So with this cycle of raising interest rates, we have seen the dollar continue to strengthen against other pairs, with the pound being one of the most hit. So earlier this week, and I'm talking about yesterday, the pound hit a low against the dollar that it has not hit before, and this is 1.03318. So immediately after hitting this particular bottom, made a very strong comeback before pulling back down a little bit. And then today, the pound has been quite resilient against the dollar, attempting to push the prices higher. So if you look at the volatility that happened on Monday, it was quite crazy. It's not something that you get used to. So a drop of about 4.74%. And this is equivalent to about 5,000 points, or basically 513 pips. So immediately after that drop, notice that the movement in the opposite direction was even bigger by about 51 points, or basically 595 pips. This was a big swing before pulling back down, and you can see in early morning trading during the Asian session, the pound was strengthening against the dollar, kept going up until it entered this particular range. So it seems like the market is quite rangy today. Doesn't seem to have very strong momentum in any particular direction. So clearly, you can see there's some form of horizontal resistance here. And also, if you look at the support, sorry for that, the support seems to be holding quite well here, save for the last couple of minutes. So in the last 10 minutes or so, it seems like there's a break towards the lower side, and perhaps the dollar is picking some strength as we enter into the New York session. So this is one of the things we're observing. There has been some level of consolidation here for the pound USD. This is a very small time frame. This is the 5 minutes chart. So looking at the last 10 minutes, it's clear that the pound is losing to the dollar, but I don't think this is significant enough, especially when you consider a higher time frame such as the 1 hour chart. Seems like the market is still rangy. I wouldn't say conclusively that the market is now headed downwards, because we have a breakout in 5 minutes. So maybe the market is just pushing back down a little bit lower, and then it goes in the opposite direction, and then maintains the kind of sideways momentum we have had since early morning. So this is a thing that you have to be aware of. It's already almost a sideways momentum. Yes, there's a simple lower trend line here, but it may not make as much sense on a lower time frame compared to if it would happen on a higher time frame. So more or less of a very rangy market today, nothing much happening. So you might want to be a little bit patient until we have the next level of break or something like that. So going back to the dollar index, clearly from the 4 hour chart, you can see the strength here. So since early morning, this is what we've been experiencing. So I just want to give you a quick overview. So dollar index opens with a gap down, goes down and then up, and then down, up, down, up. And clearly you can see that doesn't seem like an overall very strong trend. It's more or less like some form of consolidation that is taking shape around this area here. And also, if you look at the highs here, compare with this high, then it seems like the dollar index is just ranging sideways. So since yesterday, a lot of sideways momentum, nothing much. So maybe something will happen on the break, especially if the dollar index breaks to the upper side or even to the lower side. This could present trading opportunities, especially in the major currency pairs. So that's it with the pound USD. So if you go to USDJPY, we all know what has been happening here. A wide divergence between the Federal Reserve Bank of the US and the Bank of Japan. So the Bank of Japan has been on massive QE, maintaining low interest rates, and this has served well in boosting inflation, but at the same time, very bad for the currency. So the Japanese yen has largely been losing to the dollar. So you can see the strong momentum towards the upper side. Even if you do the daily chart, then you can see the big shift that has been happening. So if you compare these right from the beginning of, let's say, February, this is when we had the major move. So since then, you notice that the dollar has majorly gained by about, this is 25% against the Japanese yen, and seems to be continuing along that path. So the fundamentals have not changed. So a lot of participants in this market have been looking for such pullbacks so that they can buy and enjoy as the prices are going up. However, the weakening of the yen has become quite concerning. So about 2 weeks ago, we had some keynote address from the Ministry of Finance in Japan, basically mentioning that the currency is losing a lot as a result of massive speculation in the currency pair, and they threatened to intervene in the market to strengthen or defend the Japanese yen. So this was somewhere around this high here. So when the market got back to the same level and broke, and this was last week, there was a massive intervention to support the Japanese yen, and then there was this sharp drop that happened last week. So I'm talking about Thursday last week. So a very strong momentum towards the lower side, basically the Japanese yen strengthening against the US dollar before traders came in and started pushing prices back up higher. So as long as you enjoy this bullish momentum, you should be very careful that the Bank of Japan is ready to defend its currency. So some further upside momentum in this particular currency pair could cause the Bank of Japan to respond again. And by responding, it basically means that they could defend the Japanese yen and push the exchange rate back down. So as long as the market is down, the opportunity is good to keep on going up higher. But the closer you get to the previous intervention point, and this is around 145.9, then the higher the risk that the Bank of Japan would intervene and push the prices back down. So you have to be very careful about this, especially if you're on the buying side. However, if you're on the shorting side, then you should probably wait for some signal of such intervention before going for your short selling trade. So clearly not a very good level to be participating in such a market, especially when you expect a massive intervention from the Bank of Japan. So there's a very common term we normally use, don't fight the Fed, but at the same time, it's equally as strong when you're trading against Asian pairs. So you don't also fight the Bank of Japan, can cause out volatility in the market. So that being done, we'll be looking at some more currency pairs. So Asian pairs, this is the New Zealand USD. Clearly, you can see how the New Zealand dollar has been losing to the dollar. So it's the same story for all these currency pairs. So we have seen a multi-year lows. So in this case, we are approaching the pandemic lows for the New Zealand USD currency pair. So the lowest that we got was right here at somewhere around 0.54678. And now it seems like the market is consistently pushing that towards that particular goal. So today has been quite bullish. Most of the pairs have been strengthening against the dollar, save for the last 1 hour. So you can see in the last 1 hour, it seems like the dollar has resumed strength. But overall, it seems like a bullish day for these currency pairs against the dollar. So perhaps we'll be seeing the market closing higher than it opened for today. And maybe opportunities will appear tomorrow or somewhere within the week to buy the dollar again and enjoy the continued trend. So clearly, the continued trend is bearish. However, when you are going for such bearish positions, you have to be extremely strategic. So for instance, you can see that the market has not yet hit any kind of resistance. So even though there was a bullish momentum, didn't quite get to the upper trend line. So you might have to be a little bit patient, especially if this particular kind of trend continues towards the upper side, indicating a weaker dollar for today compared to other assets. So it's happening the same way across board. So if it's, let's say the USD yen, the yen was stronger before the dollar strengthened during the New York Open. So if you look at the pound and you go to the 1 hour chart, the pound has been largely bullish for the day against the dollar. So clearly the dollar is quite weak today. But if you're looking at a bigger time frame, let's say the rest of the week, then you might want to leave it alone, be a little bit patient, wait for the currency pairs to strengthen a little bit against the dollar, and then you go for the shorts yet again. The fundamentals have remained the same, so we still expect the dollar to continue enjoying further strength as we head further into the into next month. So that being mentioned, we might also want to look at the EURUSD. So let's find it. Is that so this is the EURUSD from the 4 hour chart. Clearly, same story we have seen with the pound, with the USD, and same story we have seen with USD. New Zealand USD is the same thing. So very strong bearish momentum, indicating very strong dollar. So it seems like the market in EURUSD is bouncing from the lower trend line. So most of these other charts are way down below their lower trend line. But for EURUSD, somehow seems to have maintained its power here. So after the sharp drop got to the lower trend line, there was a strong bounce, and it seems like the market is attempting to go up higher. So from bouncing to this area, going back up yesterday, and today struggling to move higher. So you can see the struggle here. Market opens here at midnight, jumps down, and then forms a long tail, pushes up in the early trading session. That is the Sydney and Tokyo sessions. During London, Euro was basically losing up to the current moment. And now, as we join the New York session, we could see some further strength in the Euro against the dollar. and maybe some further upside in preparation for some further shorts. So we are still adamant and looking for short selling positions. So this current price is not very convincing. So I'd be a little bit patient, hoping for the price to go a little bit higher so they can keep shorting the EURUSD, especially as the fundamentals remain as is. So that's it with some of the major pairs. So we'll be looking at more assets. So if you have any questions arising from the presentation, feel free to type those questions in the Q&A section or in the live chat, and I'll be responding to those questions right away. So hello, Chris. Welcome to the session. Hello, Karil. Hello, Esther, Eugene, Ivana, Trivia, Muyaka. Thank you, guys. How can I open a live account? I think I'll be sharing that with you. So if you have any questions, feel free to fire them right away. If you have any suggestions of a market you want us to focus on or some content happening in the market, feel free to type that right away and I'll be responding to that directly. So for the person who asked, how can I open a live account? There is the link on the comment section. Just click on it and then create your live account. Awesome, awesome. So let's proceed. That's it with the currency pairs. They're majorly bearish. The major factor influencing the market right now is the strength of the dollar. Remember, in the last 3 months, they've been hiking interest rates by 75 basis points consecutively. So 75 1 month, the following month 75, and last month 75. These has led interest rates in the US to get to 3.25%. And also the bond markets have become very attractive. So when you consider bond markets, we always focus on 2 factors. One is the yield, the return that you get from the bond. And 2 is the ability for that particular government or central bank to honor that bond. So we know that if you're investing in frontier economies or smaller economies like Kenya, the bonds will have a much higher yield because they are trying to attract investors. And at the same time, they will have a much higher risk. It's because the economy is much smaller and the country might have a risk of defaulting. So when organizations and individuals are investing in bonds, they're looking for a very stable economy with a very good return. So the US being one of the best economies in the world, or perhaps the best economy in the world, then in this case, it's very much trusted by investors and their bonds are very attractive. However, the returns from such bonds tend to be lower because the demand is very high. However, during this particular period, when interest rates are going up, they have really gone higher and the bond yields are very attractive. So from a range of about 0.2, 0.3% about a year ago, now we are looking at 3.3, 3.5% as 10-year bond yields are happening in the US. And this has become very attractive to investors. So what they are doing, we have seen out of capital flows going into the US, where if let's say you have some Japanese bonds, and these bonds are giving you 0.25%, you'd rather just sell those bonds, then go buy bonds in the US, where the return is higher and the economy can be equally trusted. So we have seen this kind of shift happening, and this is increasing inflation in lower economies and driving a lot of liquidity towards the US. And this demand is basically creating a much stronger dollar. So with people buying more and more bonds in simple terms or logical terms, basically means that you buy the dollar and then use the dollar to buy the bond. So the dollars end up with the US government and you only get a piece of paper and then you wait for your yield, let's say after 3 months, 6 months, 1 year. So in this case, it basically implies that in this case, there's a lot of dollars flowing back to the US, a lot of liquidity being pulled out of the economies. And this is causing a lot of shocks, especially to the exchange rate of smaller economies. So with the EURUSD trading below parity, that is below 1.00, I know most of you have never seen the euro trade at a lower valuation than the dollar. So this is a parity. You can see the price has consistently gone lower, meaning that the euro is much weaker than the USD. So the same case is happening to the pound. Pound is strongly weakening against the USD. And if you look at smaller economies like Kenya, then we have seen a similar path happening. So the pound is trading at 1.07, something that was doing 1.3 a couple of months ago. So if you just look some time back, you notice that it was not a long time when the pound was trading at 1.39 or even 1.4 to the dollar. And this has consistently gone down, indicating proof that the dollar is very strong in the market. So if you're looking for positions that may reward you and the US is looking to hike interest rates further, then it makes a lot of sense to fundamentally go for bullish positions on the dollar and bearish positions on other currencies. So if you take the dollar against the other currency, then you should probably be on the buying side of the dollar, especially if this particular trend continues. If something changes fundamentally, then at that point you might want to change your buyers in the market and start looking for different positions. But as per now, it's buy the dollar, short the other fiat currencies. So that being mentioned, we might want to move to another asset class, and that's oil. So we might want to start with US oil. So US oil has been losing. Main reason is a supply side. So we know that President Biden has been tapping on strategic oil reserves. So basically supplying the market with oil from the US reserves. And this handling of supply is basically leading to lower oil prices. So we have seen this happen for a couple of months. I think they started doing this on March. And since then, we have seen the oil prices continuously fall back down. So you can see this was the highest price in March. And this was during the panic situation when Russia invaded Ukraine. So oil prices had really gone up. So this was just a moment. Yes. So this is March. So this is February, March. So when Russia was invading Ukraine, oil was trading at a very high valuation, somewhere above 126. So $126 per barrel. Market dropped sharply after that, the same month of March, and then went all the way back up. So got to a high of $121 before it started this particular movement that is in the shape of a channel that has consistently seen oil prices revert back towards the lower side. So clearly, with this kind of momentum, you understand the trend and how the market has been moving. We have already covered this in other previous lessons. So you understand this kind of movement, and it seems like oil is bouncing from the lower trend line. And this is quite significant technically because we expect the price to now start moving in the upper direction for quite a period of time before continuing the original trend. So currently at the valuation of $77, it's almost 50% drop. If I just zoom out here and we do an estimation from the high here to the low here, this is sorry, 39.73% drop. So this drop is quite significant, and it's moving inflation in the right direction, where they're expecting inflation to go lower in the US. So in this case, you can see after the sharp drop, today is the first day in a long while where we have seen positive WTI prices. This is the other name for oil, West Texas Intermediate crude oil. So clearly, right from the beginning of the day, it has been a consistent struggle to move to the upper side, and I expect this to continue, maybe perhaps towards the mid of the week, Wednesday or even Thursday, or even if the market is strong enough, then you could see a whole week of bullish oil against the US dollar. So something to consider, especially looking at the technicals and the area where the prices have bounced from. So that's it with oil. So if you're not in it, then if there's some form of pullback, then it could represent an opportunity to go along and target some higher prices, especially considering if the dollar index weakens, let's say for a couple of days this week. However, if this bullish momentum continues and the dollar index breaks this last week's high, then it's time to believe in the dollar and trade in the direction of the dollar. However, if the dollar remains weak and doesn't break this level and keeps going down, then perhaps it would be an idea to now buy these other assets against the dollar. So it's the same thing, almost 100% correlation with the Brent oil, that is UK oil. So if this particular movement continues, then you know it's a no-brainer, you keep going in that direction. So you have to be very aware of the dollar index. If the dollar index is cruising above here, then the small rise that we enjoyed within the day could end real quick, could end very quickly. So if, let's say, the dollar index continues cruising higher, then this could be the highest we are getting with UK oil, and the price may reverse and start going back down. Same case applies to US oil. So if the dollar index continues cruising higher, then this could be the highest we are getting, and the market reverses immediately. So you have to be aware of that. Then looking at the indices, this is the S&P 500, has been quite consistently moving downwards as a result of the strong dollar. So remember, we are operating in an environment where interest rates are going higher and liquidity is being pulled out of the markets. So stocks are considered to be risky. So when the markets are uncertain and fearful, then in that case, you find that stocks tend to be going down lower, where bonds go up. That is in the opposite direction. So right now, when there is uncertainty, we don't know what might happen in the world, then a lot of investors are betting on a shorter term investment in bonds. So if you look at 2-year bonds in the US, they're really flying high because people are assured of the return. So a lot of investors are going for bonds in place of stocks. So with this kind of capital flow moving towards the bonds market, then there will be less investment in stocks, and this is leading to the current bear momentum. So with that in mind, clearly you can see it has been a bearish momentum. So nothing to think about here. So quite consistently moving in smaller, shorter term channels every now and then, indicating that this particular trend might continue for quite a period of time. So for now, it has been quite bullish since the opening of the day. So the US 500 or the S&P 500 is the overall stock market index. Basically estimates the strength of the 500 biggest companies in the US, has been consistently moving to the upper side, having bottomed twice on Thursday and Friday, forming quite a convincing momentum here. And also what looks like a W-shaped pattern or a double bottom. So there's that potential that the market could find a bottom here and move towards the upper side for a period of time before resuming the bearish momentum. So you have to be aware of this. It's such a strong bottom and that could be the basis for some momentum, maybe perhaps even the entire week. So we could see the entire week market moving upwards just based on the strong strength of the dollar. So if the dollar takes a back foot, then the US 500 could continue riding higher, and this could present some opportunities to go up higher. However, remember what I said, if the dollar index cruises higher, then all these assets might continue losing lower. So for the industrial, this is the US30 or the Dow Jones index. So clearly on a very strong bearish momentum. So we have all been here and observed the bearish momentum. So we can all observe that the bearish momentum has been pushing down lower and lower over time. So we are currently below the previous low. This was the previous low here. So now if you look at the pandemic levels, I don't know if I can load these. So this is the pandemic level, the price of the Dow Jones just right before the pandemic. So on March 2020, the market crashed all the way down and then recovered, then broke this level, went all the way up and then back down, bounced from the pandemic level, went up, and now it has broken towards the lower side. And it seems now we are trading below the pandemic level. That means that all the gains that we have made since 2020 have been wiped away. And we could be seeing now the Dow Jones continue to move down lower. So this break here was quite significant yesterday. Made a lot of news, a lot of investors and analysts were basically saying that the Dow Jones is now in the recession territory. So this break here was very significant, breaking from here and going below the pre-pandemic levels here, basically indicating that now the Dow is in a confirmed bearish momentum, and this could continue for a while. So today seems like a retest market opens, goes back up to the resistance, retests, goes back down, retests again, goes back down. And this has been the consistent theme for the day. So right from the opening, same case yesterday here, getting to resistance like 3 times, today like 2 times. So we haven't broken that yet. So there's still that potential that the market continues downwards. So if the dollar continues strengthening, then the Dow Jones continues weakening. And the reverse is also true. So if the dollar or the dollar index weakens, then the Dow Jones could break this level and head a little bit higher. So you have to be aware of that, and also just be aware of the sideways momentum here, right from Friday in the evening, yesterday on Monday, today being Tuesday. So you could be seeing the market playing around here before we establish a new direction to take. So that being said, we look at one more asset. In this case, I'll be looking at Bitcoin. So Bitcoin, for those who are very new to Bitcoin, you should know that this is not physical Bitcoin or the normal Bitcoin you're used to. This is a CFD product, or contract for difference. So if you buy and sell Bitcoin, you're basically trading a contract for difference. You cannot deposit or withdraw Bitcoin from this particular platform. So you just trade it the same way you do trade Forex and other assets. So clearly, you can see that the market was trading in a triangle. The triangle is very simple and easy to understand. Before the breakout happened earlier today in the morning. So this is your triangle here. So market went down and then up, down, up, down, up before breaking the upper trend line here. So after breaking the upper trend line, you can see the sharp momentum towards the upper side, found the resistance at the genesis of the triangle. So notice that the triangle started here. So after the breakout, a simple target was on this high of the genesis of the triangle. So the market rallied all the way to this point and then started finding resistance, and it's currently trading here. So the next momentum from Bitcoin, from this point going forward, it's either the market breaks the level or reverses and moves further downwards. So there's that potential that Bitcoin clearly breaks here and heads to the next resistance, perhaps here, and that would be 22,766. Or if it failed to break that level, then the potential is to go back to the trend line. This would be somewhere around 19K. So the potential that Bitcoin could go back down to 19,000 is very real. So you have to observe the price action around this area to make a decision about the next set of movement. So it has been very strongly correlated with Ethereum. So as for Ethereum, it's a similar case. So even if you look at the charts, more or less like a triangle. So multiple highs here, market finding support here, then breaks towards the upper side. So the momentum was not as big as Bitcoin, but the idea is the same. Market breaks out of the upper trend line, raise all the way up, gets to the resistance, and now it seems like Ethereum is headed higher. So if it breaks this level, then we might want to look at the next resistance or support area. So this former support would be a nice target, and that is 1496, so roughly 1500. So we tend to use the round number in this case. So 1500. So if Ethereum breaks 1395, then 1500 might be a potential target, especially considering the strong momentum that started from the bottom of the pyramid here. So also you need to understand that there is some form of decoupling happening. So if you look at the relative movement of Bitcoin against the S&P 500 has had quite a strong correlation, and I think that is changing over time. So just from Google, if you Google the S&P 500, and then you overlay the chart of Bitcoin, the Bitcoin is the one in yellow, you notice that these two charts have been moving relatively in the same direction. So if the S&P 500 is going down, Bitcoin is also going down. If it's going up, Bitcoin is going down. So the movement has been relatively the same for each and every day. However, in the last 2 days, we have had some difference here, where while the S&P 500 has been consistently going down, Bitcoin has started moving up, moving in the opposite direction with the S&P 500. So we call this decoupling, where they no longer move as a couple. And this is a good indicator that Bitcoin is breaking away. And it's something that you have to observe for a while. If this kind of decoupling continues happening, then it would mean that Bitcoin is now trading independently of the S&P 500. and these would imply some trading signal, especially for Bitcoin, towards the upper side. So if the S&P 500 is going down and Bitcoin is going up, then it's the good kind of decoupling. So we could be seeing the Bitcoin price move higher. However, this is yet to be established. It's only a data set of 2 days, yesterday and today. So you'd have to take a little bit more days to study the decoupling and see where the divergence is headed. So if it's going higher and higher, then you know how to execute that and take advantage of it. So clearly, from a shorter term time frame, this is the performance of both assets in the last 1 month. You notice that on a day, if they are going up, they are going up. If it's sideways, it's sideways. If it's down, sideways, down, sideways, down. So you can compare all these steps. So for instance, here, if you look at this particular day here, September 21 to September 22. So S&P 500 is going down, Bitcoin is going up. And now they resume the same trend momentum downwards, further downwards, and then notice the sharp momentum upwards, where the S&P 500 hasn't been moving up in the similar manner. So it seems like Bitcoin is breaking away. So it's something that you need to observe. And if it plays out, then it would be a very nice and interesting trading opportunity for Bitcoin against the US dollar. So thank you very much, guys. Thank you for your time. So I'll be checking to see if you have any questions before we end the session. So why am I getting difficulties in creating my account? I don't know why. You probably have already registered for an account before. So you might want to go to the FXPesa website and then click on live chat and then drop a ticket over there. Your analysis on gold and oil, I think I've done that. What is the best time to enter a trade? There's no best time, always the best price. So depending on the trading approach you're using, you find the best price regardless of what time it is. So thank you very much, guys. I hope to see you on the next session.